The port strike begins in the US and stocks are headed lower, as are bond yields. Right now, as I speak to you, the NASDAQ is down 1.74%, the Russell down 1.52%, the S&P down 109, and the Dow is down about 58 basis points, so almost 0.6%. On the data front, German manufacturing PMI was slightly stronger than expected, but still very weak overall. Same with the EU. Eurozone inflation came in as expected, and U.S. manufacturing PMI was weaker than expected across the board, with prices falling into contraction territory. Jobs opening were also stronger than expected, but still only around 8 million. Bond yields, as I mentioned, are lower, down 2 in the 2-year note yield. Down 6 in the 2-year note yield, down 8 in the 5-year note yield, down 9 in the 10-year note yield, and down 8 in the 30-year. This is all very indicative of a potential flight to safety. And matching up to that, we have the dollar rising and the VIX moving higher. The VIX is up about 2.5% right now, over 17. The dollar is up by 0.5% against the euro, 0.66 against the pound, and it's only slightly lower against the Japanese yen, while moving higher in the aggregate for the second consecutive sessions and by the most on a percentage basis in a week. The dollar being higher and the yen being higher, again, flight to safety. We also have gold and silver higher, again, flight to safety. But we do have crude oil higher, which doesn't really match with that, but it could be because of the OPEC meeting tomorrow. Right now, it looks like OPEC is unlikely to change its output policy, which would mean that cuts would remain in place. However, we have to wait and see and keep an eye out for leaks about what they're going to announce at the meeting. Looking ahead, earnings after the close today, we get Nike, Lamb Weston Holdings, and Cal-Maine Foods. Before tomorrow's open, ConAgra Brands and RPM International. Data tonight, we only have Atlanta Fed President Raphael Bostic speaking. Tomorrow, EU employment data, German 10-year Bund auction, ADP employment change in the U.S., along with a speech from FOMC member and Fed Board of Governor Michelle Bowman.